Okay, sorry guys, a couple minutes late, but that's no big deal. We're all okay. Not missing an action. I'm here. Okay, so let's finish up this chapter. I'm just going to scan back, see if there's anything I missed. Let's see. Capital gains. Okay, let's just go over that real quick one more time. So, you buy a house. Doesn't matter if you're single or not. You buy a house. You paid $500,000 for it. You lived there for 30 years. Got married, raised kids. Everything's cool. And then one day you turn around, you sell it, it's worth $1.3 million. Excuse me, it's a million. 1,300,000. Well, that means when you sell that house, you made $800,000 of profit. Capital gains is profit after holding an investment for a period of time. Long-term capital gains is 24 months or more. Short-term capital gains are less than 24 months. So because I'm married, when I sold the house, I get a $500,000 capital gains exemption from that amount. So really, I only have to pay taxes on $300,000 of capital gains or profit. This exemption reduces my tax burden when I sell the house, provided that I live in the house a minimum of 2 years, 24 months, or at least 2 of the previous 5 years before I sell the house. For a single person, that deduction is $250,000. For a married couple, it's $500,000. But again, I must live in the house a minimum of 2 years out of the previous 5 years in order to qualify for my capital gains exemption. Now, it's a very simple concept. That's all you have to remember. Was there any question about your capital gains exemption? Couple questions. Okay, so let's hang on. Wait. Can I use the $300,000 to buy my retirement home and be exempt from? I'm sorry. What 300,000 are you talking about? I'm sorry, Robert. Forgive me for a misunderstanding, but of capital, you can use any amount of money to buy any house you want to buy. You still have to pay taxes when you sell your house if you made money. So the capital gains we get, 300,000, boy, then need no times the person. Boy, you got me. So the capital gain we get, 300,000 profit, then need to times the percentage of the tax. You lost me there. Then that's how much I have to pay. You lost me on that, Jinyu. I have no idea what you're referring to. Does every citizen of New Jersey get capital gains if you are qualified? You get the capital gains exemption if you're qualified, yes. Can I, based on my example, can I use the $300,000 to buy my retirement home and be exempt from? No. No. Okay. Was there anybody else with a question? That's correct, Rachel. Capital gains are not property taxes. That's correct. Jinyu, you're saying 3%? I don't think so. I believe capital gains start at 20% and higher, like 25% and higher for capital gains. What if I do it? You're not eligible for 1031 a residential house, so you can't use a 1031 in your residential house. Oh boy, guys, what if the house is 200,000? What does that mean? What does that mean? But what if I buy another house? I answered that already and say, no, you have to pay profit. You have to pay tax on the capital gain. There is no capital gain for residential property under a 1031 exchange, Brian. Again, I don't know where you guys are coming up with your stuff of 1031 exchange. We didn't talk about anything about 1031 exchange because your residential home is not qualified for a 1031 exchange. So I don't know where you guys are getting some of this information. Not from me, certainly. The tax rate is 3%. Okay, guys, you're getting way out of bounds here. Stop. I got to put a halt to this. First of all, capital gains starts somewhere around 25% and goes up, not 3%. So if you made $300,000 over the $500,000 exemption, you have to pay 25% of the $300,000, or roughly $75,000 in taxes to the IRS, not to the state. It's not, or the town. It's an income tax. So guys, please only keep your focus gazed at the information in the textbook. All this other stuff you guys are bringing up has nothing to do with what you're going to be tested on. Nothing. So please, again, stay focused. Understand the information presented is what you're being tested on, not all this other stuff. It's all, believe me, fluff and not substance. The stuff being presented for your edification to learn is the substance you need to study to pass the exam. I got to move on. I'm sorry. We're wasting way too many time on what ifs and all kinds of crazy situations. All right. So what about home sellers? Do they have any tax issues? Yes, we just talked to you about the capital gains. Home buyers, there's a benefit to them. If you're a first-time home buyer, you could qualify by withdrawing up to $10,000 from any qualifying retirement fund, IRA, without having to pay any withdrawal penalties. In other words, if you're working a job and you're buying a house and you need money for down payment or something, you can go to your plan administrator in your work and say, hey, do I have a qualifying IRA that I can use for tax money? Say, yeah, your IRA qualifies you, so you can take up to $10,000 out of your individual retirement account without early withdrawal penalty and use it as a down payment for the purchase if it's for your first time purchase of a house. So again, if you need $10,000 for a down payment, and if you have a qualifying savings account in your work, then you can go to your plan administrator, ask if it qualifies, and if so, you got $10,000 you can use for down payment if you're a first-time home buyer. What's not in the book, and we are going to discuss it at a different time, is when you sell a house, you have to pay a transfer tax. A transfer tax is a tax that you must pay the state of New Jersey based on the sales price of the house. And it's calculated in a very convoluted way. In fact, in chapter 21, and I'll give you the page, on page 363 in your textbook, is how to calculate capital gains tax. And it comes out to roughly 0.75%, less than 1% of the sales price you must pay the state of New Jersey as a tax for selling your house. It was also announced yesterday that New Jersey leads the nation with the amount of people moving out of state. So if you sell a house and move out of state, besides your capital gains tax, besides your transfer tax, you also have to pay a 2% based on the sales price exit tax. What? No, I'm being very serious here. Because so many people are moving out of New Jersey, the state wants somehow to get additional revenue from unpaid future income tax that you're not going to be paying. So they penalize home sellers by tacking on a 2% exit tax based on the sales price of the house. So now here's one more tax for buyers. If you're a buyer of $1 million property or more, a buyer must pay the state of New Jersey 1% of the sales price in order to buy the property priced at $1 million more. Now let's look at a scenario where the seller is selling a $2 million house to a buyer. So at roughly transfer tax, we're going to say it's going to be roughly, let's say, $17,500 for a transfer tax to the seller. If they're moving out of state, there's the exit tax, which is 2% or $40,000, right? And then the buyer's luxury tax is 1% or $20,000 from the purchase of the house. So in essence, the state of New Jersey collects $77,500 from the sale of a $2 million property where the seller moves out of state. What? Yeah. You got to pay a transfer tax of roughly less than 1%, 17.5. Exit tax 2%, 40 grand. The buyer has to pay a 1% luxury tax of 20 grand. The state of New Jersey collected $77,500 from the sale of one $2 million house. And there's a lot of multi-million-dollar houses in New Jersey. Where's all that money, you might ask? You can ask all day long, you'll never get a straight answer. So there you go. That's the tax implications of selling a house in New Jersey today. Very sobering, to say the least. All right, so we're done with the chapter. Let's pull up the review questions, finish this up, and then we'll start chapter 9. Give me a second while I pull up the review questions. There it is. Here we go. Okay, ready? Here we go. Number 1. New Jersey offers partial property tax exemptions to and from those responding, about 83% got it correct. B for boy, homeowners 65 and older. Churches are exempt. They don't pay any taxes. Number 2, in New Jersey, the tax rate is expressed as